Let's start in the world of monetary policy. Specifically in South Africa, consumers are breathing a sigh of relief after the central bank decided to cut rates yet again. The rand took a bit of a dive in the news, raising concerns about local rate decisions. The Monetary Policy Committee was split on the decision. Two deputy governors preferred to keep rates on hold, but the majority vote of 4 won in favour of a 25 basis point cut in the repo rate. This is the third rate cut since September, when rates were around 11.7%. And were around 11.75%. Now, today's cut brings the prime lending rate to 11%. The governor of the Reserve Bank says while inflation does appear to be well contained in the near term, the medium-term outlook is a lot less certain. Now then, let's bring in Sumitra Naidu, who's joining us live from Joburg with more context and reactions to today's decision. So, Sumitra, adding in last year's rate cut, the MPC has effectively cut rates by around 75 basis points so far. What reactions are you getting from businesses and households alike?
Hi, Rama. Of course, lots of relief, especially since there were concerns that this rate cut might not have actually happened. We had inflation coming in a touch higher in December at 3%. This, though, is still at the bottom of the bank's target band of 3 to 6%. But the uncertainty was really coming through more from the US after the Fed chair said in December they were adopting a more cautious approach. They may keep rates limited and may not actually have any at all. And of course, yesterday, the Federal Open Market Committee had their meeting and decided to keep rates unchanged. So it really changed the outlook also on the domestic front and created lots of uncertainty here. So I think getting this interest rate cut really providing some relief to cash-strapped consumers struggling with high utility costs, basically the cost of living in South Africa. Rama?
Indeed. So the Monetary Policy Committee statement, that made for very interesting reading. And here's what stood out to me. They say the inflation outlook over the medium term is, quote, more uncertain than usual. What factors have the MPC so deeply concerned?
Well, on the domestic front, inflationary pressures are coming from high electricity costs and public sector wages. Negotiations are currently underway between unions and government. Unions pushing for 6% upwards. Government has already raised their offer to 5%. Now, even at 5 or 6%, this will have a huge impact on how that lifts this line item on the government's balance sheet. At the moment, the wage bill is taking up a big chunk of government spend. He also spoke about the need for structural reforms and the volatility of the rand. The currency has depreciated significantly in the last few months, and a lot of that has to do with what's happening globally. And this was some of the concerns coming through from the MPC meeting. They were actually split on the decision. Some of them, 2 of the deputy governors wanted and didn't want a rate cut. They thought, let's just keep it on hold, taking a more cautious approach. They're very concerned about what's happening globally. But more particularly, I think there's concerns around America and the implications of US President Trump acting on all of his threats. The most worrying is around raising trade tariffs, what this will mean for the South African economy. Take a listen to what the governor said today.
The MPC spent some time during this meeting reviewing a trade war scenario. This featured a universal increase of 10 percentage points in US tariffs with retaliatory measures by other countries. The scenario showed higher inflation and interest rates globally, as well as greater risk aversion in financial markets. In response, our model projected the rand depreciating to nearly 21 rand to the US dollar, with domestic inflation reaching 5% and the policy rate 0.5 percentage point higher at its peak relative to baseline forecasts.
Indeed, and just to give our viewers a bit of context, so that 21 rand to the dollar number that the central bank governor was talking about there, that's roughly 16% lower than where the dollar rand rate is at the moment. So it's not a small delta that we're talking about here. One last question for you, Sumitra. The MPC also anticipates a rebound in growth in the final quarter of 2024, partly backed by stronger household spending amidst the pension reforms that we saw in that quarter. But do they expect that growth trend to carry on into the first quarter, maybe the first half of 2025?
Yes, so the governor did say they expect a rebound, but also noted that a number of economies are contracting at the moment. But they do expect for South Africa a pickup in the fourth quarter, because of, as agriculture normalizes, and that should close the output gap. So growth expected to trend higher. The MPC also did some scenario planning here and found that if there's movement in addressing structural reforms, the model showed growth picking up gradually, moving higher, and eventually getting to 3% in 2027. Still very low, but it is a big improvement for the South African economy. The governor said this scenario also showed lower inflation and lower interest rates, demonstrating how these structural reforms can reduce the country risk premium and create more monetary policy space. So very important, but it really depends on whether those urgent structural reforms are being addressed, and that's basically the scenario if it is addressed. So definitely a rebound as agriculture, because we saw a huge dip in agriculture in the third quarter. We saw the economy contracting, GDP coming in much lower, but they do expect that to normalize in the fourth quarter. So we should see a better figure. Rama?
Indeed. Looking forward to seeing the numbers coming through from February onwards, and of course the budget as well sometime next month. Sumitra Naidu joining us there live from Johannesburg.